Hey, what's up everybody? Wednesday, September 25th. So, nice little rebound in the stock market today. However, I would caution this may not hold, and I'll tell you why. Another big surprise out of the Fed. This has been kind of par for the course now for a while. All these surprises, right? Rate cuts, surprise ending to balance sheet roll-off. Now these repo actions that have been going on in monetary operations. So today the Fed announced an increase, a significant increase in size in the repos that they have been doing. The 75 billion overnight repos have been up to 100 billion. I'm not so concerned about those, but the 14-day term repos have gone from 30 billion to 60 billion, and there's going to be two of those this week, one tomorrow and one on Friday. So that's another 120 billion. Now, the Fed obviously reacted in this fashion because in its quest to bring reserve balances down, and it was doing that all through the period up until July, it had really brought balances down to a level that was inconsistent with the rate of loan growth and also the rate of deposit growth, right? Banks have to have 10% reserves relative to the amount of deposits. And that balance got so tight that the Fed actually put the system short. So it reacted when we saw those spike in the overnight repo rate, went up to like 10%, way over the Fed funds rate. And yeah, it added that liquidity. It started doing those repos, and the rate has come down. Now, as of yesterday, it was around 1.9, 1.95, which is probably where it should be. But now they have doubled the size anyway, doubled the size of these term repos. So this is, again, this very significant dumping of reserves into the banking system. And as I've explained many times here in these videos, that the short-term impact of that is negative. So in spite of the fact that we had a pretty nice stock rally today, I don't expect that to hold, because the surprise announcement of the doubling of those term repos, tomorrow you're going to get 60 billion, Friday you're going to get another 60 billion on top of these 75 billion overnight repos that they're doing. Now, I know all this sounds to many of you like a lot of financial gobbledygook, and I understand, but I've tried to explain it in the past. Just realize that these actions are very disruptive to the markets, not just stocks, but to risk assets in general. So you're talking about commodities. Actually, gold should perform very well on this, because it has been a good hedge against the stock market when it sells off, which is very likely now going into tomorrow and Friday, and actually as these things play out over the course of time. And this program, these operations are going to continue until October 10th. Plus, on top of all this, and let me know if I'm going too fast for you, on top of all this, you have the normal reserve cycle, all right, which I talk about all the time with my subscribers. We know exactly when these cycles are going to hit. These are absolutely tradable cycles, because we know the flows of government spending and taxation, and these are like financial tides. I mean, that's like the ocean coming in and the ocean going out. And when when these tides are going to be at high tide, and when when the tides are going to be at low tide, you obviously can do something there. There's an opportunity to take advantage of that. So just letting you know, some of you have taken advantage of my 30-day free trial. You've been signing up for MMT Trader. You will get, believe me, you will get much more informed. You will get much more educated about this. It is not just that weekly report that I put out, but I send out many emails daily updating my subscribers on the situation with respect to the markets, with respect to any new policy developments. So go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader or a 30-day free trial of Zombie Trading. You need to be informed about this stuff. if you understand the impact of these operations, the impact of policy. By the way, these will have a short-term effect. All right, these are the equivalent. I mean, as long as I'm going with the ocean analogy, these are the equivalent of throwing like a big rock into the water, and it makes ripples. It has an effect, and the effect is something that we are able to determine in advance, and so we take advantage of that. But the longer term picture, the ocean, if you will, really has to do with the fiscal situation, and you know I am on top of that every single day. Nobody has that information before I send it out. We see that real time every single day. So go to my website, pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. But just to repeat, tomorrow, Friday, and really looking out through the month of October and possibly even into early November, these disturbances, disruption caused by these monetary operations, they are going to be in existence in addition to normal reserve cycles that we are going to be subject to at this time of year. All right, everybody, have a great evening. See you tomorrow. Bye-bye.